I don't know if you saw it or not, but recently an article came out about one of the largest home builders in America and their strategy going forward into 2026. I think it's going to be important to pull this apart, digest it, and show you what this might mean for you if you're thinking about getting into the housing market. So I'm going to share the article with you and I'm going to I'll talk you through it. And then I want to give you kind of some insights of what this means. So here we go. HousingWire put out this article recently about our friends over at DR Horton. And it says what DR Horton strategy reveals about new home demand. And I think this is super important. So for context, I just want to tell you, this is not me endorsing DR Horton as a builder one way or the other. If you've watched any of my content, you know kind of my thoughts on them. But what this is me saying is this is one of the largest home builders in America. And if they're making these shifts and putting this strategy together, then other builders are starting to pay attention and are probably going to follow suit. So let's see what we got again from HousingWire. So here we go. Everybody's got this assumption housing sucks. Could be. Mortgage rates are high, construction costs are out of control, regulation is choking supply, and the loudest refrain from it all is everybody keeps saying it's rates, it's killing it, and which makes for a clean, easy headline. People love that. But here's what's interesting in this article. As I was reading through this and I was parsing it out, I want to point out a couple things. So check this out. With DR Horton, one of the largest home builders in America, in the high tens of thousands. I think that's high. I think that's low. I bet they did more than that. Closings were down from the year prior, but this reflects timing, product mix, and inventory management, not a sudden disappearance of buyers. Home revenue totaled around $6.5 billion on 17,000 closings. Again, I think they probably did a little more than that, just knowing previous numbers. Gross margins came in around 20%. So when I tell you guys, builders are trying to do everything they can to stay profitable and keep their margins up high, like what they're trying to be is in that like 15 to 25% margin range to keep them profitable, which is down from the year before at 22%, but essentially flat. Price compression matters, but they've shifted their product. And so I think this is the part that's super important, that when you understand, like I said, I want to give you the context here in the article, and then I want to give you what some like actual practical things of what this might mean. I think they're making a couple of big decisions here. Here we go. Look at this. Here, I talked about this earlier in a video this year. DR Horton didn't stumble into this position by accident. They've reshaped their operating model around this one simple question: what monthly payment can buyers actually afford to handle? I told you this earlier in the year. I said, hey, this is going to be the standard of conversation going forward across multiple builders. They're going to do everything they can to talk about monthly affordability. And this just backs up what I've already told you. Hey, what can we do that the buyer can actually handle? Everything else follows. The mindset has shown up in several concrete ways. And this is where it starts to get interesting, because again, if they're doing it, I think we're going to see this shift from a ton of other buyers in the market. Smaller, more efficient homes. The home size has steadily shrunk on paper. This is interesting. Average square footage fell roughly 7% in the last 6 years. It was on average 2,092 square feet in 2020. It's now 1,954 square feet on average for DR Horton. So of course they have homes that are bigger, they have homes that are smaller, but seeing the average square footage shrink by 7% and people are gonna be like, oh yeah, it's shrinkflation, it's this, it's that. Well, part of that, yes, but also they're trying to cut back on material costs. But then look at this also. Over the same period, the average price decline, and again, this is a national market. This is not just DFW, but nationally. Average price for them declined from $392 to $365. This is not value engineering, it's reality engineering. Interesting choice there. Fewer homes per unit, lowers payment, out waiting for the rate cuts that may or may not come. It serves the demand pull. And then this is interesting too. Around 63% of Horton buyers are first-time homeowners, with the average household income at $95,000 and an average FICO score of 721. This is not speculative money or luxury demand. This is core American housing. So Horton is, for good or for bad, whether you like them or not, they are trying to build in this space for this under $100,000 buyer, with a 63% of their buyer pool being first-time buyers. I think that's interesting. The other thing I think that is important is this piece right here. Okay, well, first of all, this mortgage piece. We're going to do a whole other video. We got to talk about the mortgage things and how this works, but they own their own mortgage company. I don't want to get into that. But what I do want to get into is these last two pieces, because why does this matter? And then I want to back you into what we're talking about in our video. So Horton is not a niche operator. They build one out of every every new single family home in the nation, and has been the largest home builder for 24 consecutive years. The message to the rest of the industry is uncomfortable but clear. You cannot build yesterday's houses at yesterday's size with today's cost, today's rates, and then blame the Federal Reserve when it doesn't sell. The constraint isn't desire. People still want to own homes. Americans still want to live out the American dream, which I think is super important. But chronic shortages of resale inventory are quietly pushing buyers toward new construction, which is why I love selling new construction. I think we get a great opportunity there. Real takeaway: this is a case study in operating in a high rate, low affordability environment. Demand exists for the right product at the right price. Scale, discipline, and execution matter more than optimism. The winners won't be the builders that with the rosiest rate forecast. They will be the ones willing to rewrite and rebuild their product, pricing, and financial playbooks to make today's math work. Housing doesn't feel broken because the buyers vanished. It feels broken because too much of the industry is still building for a world of permanently cheap money, and D.R. Horton stopped waiting on the Fed. Okay, so a couple core insights I want to give you and hopefully make this work for you. Again, they're saying, hey, demand, it's not going to disappear, especially in a market like DFW, where we have continual growth and continual people moving into our market. The demand is not going to go away. So what they're doing, and I think this is important, if we see the largest home builder in America do this, everybody else is going to start to follow suit, and they're going to start changing their playbooks and how they build homes. They're all working on payment structures, right? We've talked at length about this. Everybody's offering the rate buydowns or the closing cost or price reductions right now. Some of them are doing it vocally, loudly. Some of them are doing it quietly. But like I told you at the beginning of this year, one of the biggest focuses for so many builders is monthly affordability, and do whatever they can to wait out and build monthly affordability for you as a buyer. What that also means is we are seeing, and I've seen this in real time, and I've heard this from sales reps, I've heard this from management, from being in this space and spending my time in this space. So like, this is validating in a lot of ways what I've been saying is we're seeing builders try to figure out how to cut costs, whether that means smaller floor plans, lowering standard features, lowering design allowances. I had lunch with a sales rep colleague a couple days ago, and we were talking about, hey, his neighborhood is about to take a significant price reduction on base price. But at the change of that is they're giving less in discretionary funds, and they're cutting out some standard features. So yes, the price is coming down to drive traffic into the neighborhood, but at the cost of cutting features where they can and cutting out on discretionary funds for design. So which means you might get in at a lower price, but if you're going to design with them, you might actually end up spending more. I'm seeing more and more builders redesign floor plans. They're using these buydowns intelligently. They're trying to manage the timing of their release inventory of, hey, how much inventory are we putting on the ground versus how much are we going to build versus how much are we going to talk about publicly? How much are we going to release quietly? The ones that are winning are figuring out how to manage this. And if you as a buyer can kind of understand this and understand how this moves, this is where you start to win. It goes back to that idea of, hey, we have to be prepared and we can't hope for what is going to come, right? Because the gap between the builders who understand what buyers need and who don't, the gap is getting wider. And like I said earlier, this is not an endorsement of D.R. Horton. We've talked at length about them. I think they have their place in the market. I think there's other options if you can find it and make it make sense. But let's talk about like DFW specifically. We are heavy on the supply right now for a lot of neighborhoods and at a lot of price points, and especially in our upper tiers of our price points. We're heavy. Builders are very competitive. Payments are very sensitive. And I think this is one of those indicators of a market where it's like, hey, as builders need to recognize this, like it's just an honesty conversation of saying, hey, what do we need to do? Because we can't keep continuing to hide from the affordability. We have to be in a place where builders are making as best as they can. And yes, there's so much else that goes into the affordability. It's the taxes, it's the insurance, it's the MUDs and the PIDs on the property taxes. But the strategy is going to be monthly payment at every price point, right? Like, because for somebody, a $3,000 a month payment hurts just as much as somebody else who's making more money and a $5,000 a month payment, right? And so they have to figure out how to make that attainable while still putting out quality product. And I think that is the biggest challenge. And I think that's why it matters so much who we look at and who we build with and the conversations that we have. Because I don't want you getting into a situation where you're getting a home but you're not getting a quality product, right? So I don't want to, like, we also don't want to play this like doom and gloom hype game. I think like the key is smart, intelligent decisions right now as a buyer to help you navigate this. Again, if they're going to continue to cut, I don't know what the bottom is, right? Like in 5 years, if this doesn't get better, is that average square footage going to go from 1950 to 1800? I don't know. I can't begin to think about what that will lead to if we don't get this affordability space under control. Now, I know people are going to be in my comments and y'all going to tell me like, well, it's just all terrible and it's this and that. Like, I get it. I get it. I'm trying to help you. I'm trying to help you build out the strategy to where you can win. We are seeing builders put money on the table to make deals work. We are seeing price reductions. Again, at the higher the purchase price, the more potential incentive and reduction we're seeing. At the bottom end of the market, like what we saw on the housing, I mean, like, let's go back, let's look at it really quick. Average purchase price went down from 392 to about 365. Of course, national average, their purchase prices went down. At that point, their margins on those lower end, on the lower priced homes, on the lower affordability homes, the margins for every builder are tight. So when you're looking for them to negotiate with you, you kind of have to be creative in what you're asking for, what you're doing, because again, they're trying to churn a profit, and in some places, a lot of they'll lose money on one thing to make money elsewhere. They care about getting a profit, but they also care about getting money back. Like it's a churn rate, right? So like if we can close on one house, we can start the next house, and if we can close on that house, we can start on the next house. So strategy, I don't know what this means. I think this means we as buyers, we still have to go in and be aggressive. I think this is where we go in and say, hey, we want to see you, buy down the rate. We want to see some price reduction, and we go find the house that makes sense for us and our family and our livelihoods. And hey, our kids play soccer here, or this is where we want to go to church, or this is the schools, or like whatever those dynamics are. I think we have to play into that. I think your job is to say, hey, I want to find the right spot. My job is to understand what the builders are doing and how they're adapting, right? Which ones are open to helping, which ones are pulling back. Like that's my job. And again, your job is to be ready and be prepared when the time comes. So if you have questions, you have comments, or you need help buying a new home here in DFW, love to have a conversation with you. We always put our contact information right down below. If you don't want to talk to me yet because you're like, Zach, I don't even know you yet, that's okay. Check out the website, because on the website, you can browse by builders, floor plans, communities, and it's all new construction stuff directly there. And then when you're ready, we can have that conversation. So I want to say, hey, HousingWire is saying, here's what here's what the big builder is doing. You're going to see other builders continue to adapt and try and figure that affordability game out. And I don't think this has an end coming to it soon. So let's use this to our advantage, and let's go put together the best deal for you when it comes time to buy your house. So see you in our next video.